remember your why, and it should be written somewhere. It should be a photo, it should be a mood board, it should be something, and that you look back at it and you go, oh yeah, I'm good. I'm carrying on, or I'm going to change path, or I'm going to do something else, but don't worry about it. Because if you're just doing it to be famous or to have loads of followers or to make loads of money, you ain't going to make it, mate. You're not going to make it. It's got to hit home. It's got to be emotional, and it's got to be personal to you. And that's when you can translate it into success.
Nobody's born incredible. People who do incredible things simply took the right steps. This is our journey. This is the hunt for incredible. All right, on today's episode, we have a special guest, my man Ankur Chadha. He is in private equity and real estate, and so I'm super excited to dive in because, as many people in the space know, the two most important things in real estate are finding deals and finding the capital for it. And your approach is really interesting. We had a brief conversation over the phone, and I love the way you're approaching it because you're targeting a very specific niche and angle to enter the space with that does enable you to pull in people who have expertises and things, and you're leveraging that expertise, which is something that I'm a big fan of. It's what I did with the hotel that we ended up closing on. But your approach is slightly different, so I'm really excited to dive in. I appreciate you being on the show.
Yeah, sure. No, great to be here. Thank you.
Cool. So let's kick off with, how did you end up entering the space? And you can even start from being in the UK and your story over here, because that's a super interesting one.
Yeah, sure. No, thanks. So look, I started off in the UK, born and brought up there, and 18, finishing school and about to start university, had no idea what I was going to do. All my friends were doing different things, and I didn't understand the finance side of it. I didn't want to be a doctor because I knew I wasn't clever enough, and so I ended up falling into doing law and real estate. And it was a dual degree, and in all honesty, I went to university to party up with my friends, but I ended up really enjoying the real estate side of it, and I got into corporate real estate. So I got a normal 9 to 5 in London and did that for 10 years on the brokerage side, consultancy side, and really started to understand, the power of real estate. But I was always on the other side and, working with clients who are owning properties, developing properties, investing in properties. And I was trying to work out, how do I get on that side of the fence? And, 10 years later, I moved back home and started doing some investing myself, and along with my father as well. So started building a commercial real estate portfolio and, enjoyed it. It's all the good stuff that comes with owning real estate, the income and the freedom, but it didn't come without its challenges. So did real estate for a long time there, and COVID hit 2020. Everything was hit all over the world when it comes to real estate and business and just general making money and doing stuff. And you're also thinking from a different perspective as well. And I'd always had an eye on the other side of the pond, and America had always been a place that I'd wanted to live for at least a period of time. And that was it. People were getting married, some getting divorced, some getting dogs, some having kids. And my wife and I just decided to drop everything and move to San Diego. So long story, but yeah, we ended up here in San Diego, and, fresh slate for me, and decided to get my broker's license here. I'd been watching $1 Million Listing and Selling Sunset, and I thought, man, that's easy. I'll just sell houses here and make a shitload of money. I did that for a solid year, door knocking, cold calling, sold a couple of houses, did some wholesaling, realized that this isn't for me. This isn't where my skill set is. My skill set really lies in commercial real estate and building a larger portfolio. But I'm missing something. I'm missing the money, and I'm really missing to find the opportunities. So I spent a very long time traveling around the country and networking and going to events and working out how people are in this space and what are the different ways of getting into this space and making money. So I went the long way around and, made a lot of mistakes on the way, but realized that my focus is going to be private equity, and it's finding investors, raising capital, and partnering with other operators who have those skills and I'm able to get my equity and fees on the side as well. So a bit of a long story, but yeah, it's an ever changing thing in real estate. You know how it is.
Yeah. And it's always so critical, and something that's worth teasing out with your story is reflecting and saying, is this actually the best thing for me? Not just the thing that I'm most interested in, but does this satisfy my skill set the most? Like
Exactly.
stopping and saying, okay, this is great for some people, but I think my skills are better applied in this other way. And it's critically important to actually stop and reflect on that, because I experienced something similar with these hotels. Is like, my partners and I are such a great match because we are acutely aware of what we are good at and what we're not good at, and
Yeah.
leveraging each other for that, rather
Yeah.
than each trying to do something on our own or being in a space that we really shouldn't belong in.
Exactly. Totally agree. Real estate, and I think everything is, but real estate especially is a team game. There's so many different facets to it. You know, you might be a super underwriter, you might be someone really good at relationships, or you might be good on the legal side of it or raising capital. I mean, whatever it may be, you can't do everything. You can't be jack of all trades because you're going to be master of none. So that's what I was really having difficulty with at the start, because I was trying to do everything myself. But ultimately, I sat down at my desk and I thought, this is a tipping point now. I need to write down what are my skills and what am I not good at, and also what are the things I don't like doing.
Right.
And that's where you try and fill in the spaces. Then, how can I leverage other people's skills? And at the same time, how can they leverage my skills, and how can we come together as a unit? So that's what I did. I realized that, working with contractors and being a property manager isn't something I'm that good at. And also, I don't really like it. I find it boring. Whereas some of my partners, my operators, they're super good at it. They find it very, very fun, but they don't like the capital raising side of it.
Right.
And so, you get together and that's how it works. That's how companies work. There are people who are good at what they're doing, and you come together and you've got a bigger purpose.
Yeah. What were the first steps that you took into getting into private equity? Because obviously it takes a lot of time and strategic thinking to build out a database of investors, especially if you're leveraging the skills of the operators that you're
Yes.
working with and matching those two things. So what were your steps to take to actually make that match
Yeah.
and like have the credibility to build that investor list?
Of course, yeah. First step was for me to understand how the whole thing works. So you've got fancy words in the market and all this jargon, private equity, GP, LP, and all of these things that really, not everyone understands. So firstly, it was understanding how the structures work, how a syndication works, how a fund might work, and then working out how I really slot in. So slotting in as a private equity company, you bring equity to the table from private investors. And that might mean you're sitting on a general partnership table and you're able to get some equity on your side for bringing that capital, or you're setting up your own fund where you're bringing capital and then investing in other people's deals and making a little cutout for yourself. So first things first would be to understand the whole structure of it. Two is, how are you, like you said, how are you going to be credible for investors to hand over $50,000 checks to you to invest in other people's deals? It's a really tough way of looking at it, but first thing I did was to really note what my experience is and focus on not selling myself or selling the investment per se, but it would be about content marketing. And I focused more on, how do I teach people about real estate? How do I make them more of an informed investor? And that's when you really become more credible and a person of authority, when you're actually helping people rather than trying to shove investment offerings in their face. So it's changing the mindset first, and then it's all about putting the dots together, finding who the operators are, carrying out your due diligence, seeing who you trust, who you don't trust, working out what your investment thesis is, and then it's all about marketing after that. We're all in sales, and it's about, how can I show people what I'm doing and how do I attract investors? And it's tough. It's currently growing right now, but yeah, there's many facets to it.
So then, did you start by engaging operators first and understanding their strategies and how they operated, and then you packaged that to market them effectively, and then that's how you reached out to investors, was with their credibility.
Exactly, yeah. So first it would be myself, what would I want to invest in? So I have created my own investment thesis where are the locations, what is the property criteria, what is the return metrics, why am I investing in those areas, what am I truly believing in terms of demographics, economics, financials, and all those things. Once I'm happy with what I believe that I should be investing in, then I look for the operators who align with that same thesis. And you can't be a friend to many. It's finding 3 or 4 operators who you build relationships with and trust, and then when they find a deal and they're under contract and going ahead with it, that's when I carry out more due diligence and decide not to partner with those people.
Gotcha.
That's how it works. And so when I'm partnering with them, I'm on the same team as them, and that's when I carry out my own webinar and my own due diligence and package that in a way to my investors, and that's really how it works.
Okay. And what's your process for finding operators that fit your criteria?
Yeah, one is networking, and going on LinkedIn is probably one of the main things. So going to real estate groups and finding out who the main operators are, and really there's not that many people who are doing this. So it's reaching out to them and getting on calls with them and flying out there. So I've flown out to Denver, flown out to North Carolina, flown out to Texas, and met these operators and really understood what they're doing, how long they've been doing it for, and if I agree with what they're doing. So yeah, it's tough, but your name is on the hook here when you're
Right.
when you're working with investors, and you have to build that trust. So yeah, it's hustle and getting out there and flying out there and seeing them.
Yeah. That's interesting that you bring up LinkedIn. What does that strategy look like? Are you just doing searches based on real estate operators or investors in specific markets that you like, and then just cold outreaching to them and building that relationship that way?
Yeah, I mean the LinkedIn algorithm is amazing because you portray yourself in a certain way and you post certain aspects of real estate, and all of a sudden these people end up in your feed, and everyone comments on each other's posts, and you can see who the operators are and who the main players are. So really they just appear. I've done a lot of networking. I've gone to a lot of multifamily events and syndication events across the country, and that's where you really meet people and start building the relationships. So it's word of mouth, it's LinkedIn, it's going to events, it's all those same things. But yeah, it's finding a needle in a haystack, and you've got to work through it, and you have to have a lot of patience. But once you've made those relationships, it's a gut feeling, and that's when you carry on and do your due diligence more.
Yeah, absolutely. All right, so you get your group of operators, people that you trust in, and then what does your investor outreach look like? Because it sounds like you mentioned you don't actually start marketing anything until there's a deal that's under contract that's ready to move forward with, right? So how
Correct.
do you keep the investor leads warm before you actually have those deals that come through?
Yeah, no, great question. So before the deals even come, I think that the deal is secondary. First is finding the investors first and nurturing them, because you might be in your first capital raise going to your family and friends who already know you, but that's not going to last you long. That might you'll be able to raise maybe 500,000 or 700,000, and then you're done. And this business, if you're looking to scale in private equity, is how are you going to raise millions of dollars every single year from investors who trust you? So I'm obviously new to the country, so it's not like I've known hundreds and thousands of people since high school and all those things. So how am I going to really target the investors? First thing first is to work out what my investor avatar is. So who am I trying to look out for? Is it anyone with money? No, it's going to be a certain demographic. Maybe it's doctors, maybe it's people who are working in tech, finding out what their pain points are and marketing to them in that way. So I'm using LinkedIn a lot. I use LinkedIn Sales Navigator to really dial down my criteria of the type of investor who I'm looking to target. And then once I find a long list of them, I don't just email them or send them a message and saying, right, do you want to invest in my deal? It doesn't work like that. It's being able to provide them with some value. And for me, what I've done is I've built an educational platform called the Informed Investor, where I come out with webinars every 2 weeks on certain topics that are really helpful for people who have high paying but very busy jobs, and they're looking to place their capital somewhere. And so what I do is obtain their email addresses and then invite them to a webinar that I'm hosting on Eventbrite. And that way my emails aren't blocked as spam because they're actually coming from Eventbrite, and the people who sign in are actually opting in because they're interested in it. So I know that anyone who turns up to my webinars, one, they're accredited investors because they're people who I've directly targeted on LinkedIn, so I know what their demographic is and who they are. And secondly, they're interested because they've signed up. And so those are the people I'm targeting. So it's very much a one-to-many approach rather than a one-to-one approach. I was at the start going to networking events and talking to people about it, but you'll end up speaking maybe to one or two people that you've had a decent conversation with. And most people at networking events are looking to sell their own services. Right. So I found out that no, it's who are the people out there are actually going to invest in my deals, and let's target them directly and provide them with some sort of webinar or something that they can use. And then it's a nurture program. So, I have automations, email marketing, and nurture sequences and all those things that I've had set up. And so that I'm at the top of their inbox, every week or every 2 weeks, giving them little nuggets of value, and with a call to action, book a call with me. Because ultimately that's what I want, is to jump on a call with them and then understand what their investor goals are.
Okay, that makes sense.
So there's a whole marketing process, and that's the only way to really do it. You're not going to just attract people by going to networking events if you're really looking to raise millions, because if you're looking at $50,000 checks, $100,000 checks, you need hundreds of investors that are investing every single year.
Yeah.
It's tough.
Yeah. So you establish a criteria, you reach out to them. The value that you offer is being more informed as an investor to better understand what they're investing in and how to think about investing. So that's how you keep the leads warm. And then that's the same email list that you reach out to once a deal comes across the pipeline. And you're
Correct.
Like, hey, all the things we've been talking about, now you have an opportunity to apply it.
Exactly. That's exactly how it works.
That's awesome. What have you found is the sweet spot for the ideal investor?
Yeah, so that's been changing over the last year, and I'm trying to sort of make it a little bit more narrower, because I think the more niche that you go, the investors on the other side, their lights sort of switch on, because if you imagine you're getting an email and it's you could tell it's targeted to the masses, you don't feel very special and you'll end up just deleting it. But if it starts to sort of switch lights on, you're like, oh, that's me. Oh, that's me as well. And those are my pain points. You start to take interest more, and really that's what I'm trying to do. So my investor criteria is between 35 and 60 as an age bracket, working in either the medical field or in Silicon Valley in the tech field, and those who are earning a minimum of 300,000 a year. And so you would generally see people in those demographic, they're worked very hard. They're looking to place their capital somewhere, but they don't have the time or expertise to find these deals. And so it's stuck in an index fund somewhere in their 401k, and they don't know what's going on with it. And it's those types of people that I'm trying to sort of target, where they can leverage my time, my skills, my experience, and they don't have to pay me a penny. They're just investing in my deals. And so it's a win-win situation where they're able to get 15 to 20% returns on average each year, and I'm able to grow my portfolio for my family.
I like that.
Yeah.
So you mentioned 15 to 20% annualized return. What is the typical term of one of their investments?
Yeah, typical term is really 5 years. So there's some shorter deals, 3 or 4 years, and some longer deals at 7 or 8. But really the sweet spot is 5 years. And there's some investors out there that might think, wow, 5 years, that's a long time to lock up my money. And that's true. It is, because you really have locked in your money for 5 years, and you can't really get that money out. So it's illiquid in that comparison to the stock market, for example. But if you're already a high earner and cash flow isn't a huge issue for you, and really it's capital preservation and growing that capital long term for you, which real estate really is, it's a long term strategy, then 5 years, isn't really a problem. And so most of our investors are of the opinion that, we're just going to keep investing, and just once it's set it and forget it kind of thing.
Right.
But you're still getting, 6 to 7% cash flow per year. But when we sell, the equity gain you get, that's when you're making the sort of double-digit returns on an annualized average return.
Yeah, that makes sense. What does your CRM look like in terms of managing and maintaining relationships and knowing, I guess you could call it the state or the phase of each investor? Like, oh, they're in the intro education phase versus, oh, this is a very warm lead that I should continue following up
great
on.
question. Yeah, so the CRM really is the hub. It's where I spend a lot of my day. I've set sort of an opportunity pipeline where you'll have sort of new leads who have come into the pipeline, and I ensure that I use sort of tags and a point system for each investor or each lead that has come in. So for example, if a lead has come into my CRM through signing up for an ebook that I've got on my website, or maybe signing up for a video course that I've done, or someone who's signed up through to a webinar, it will come into my CRM with that specific tag. The Investor 101 he signed up for, or he signed up to this webinar. And so that's how I know they've come into my CRM. And because they've come in through that tag system, they'll be treated differently in that CRM. So I've set sort of different pipelines and different email marketing strategies depending on what tag that they have. Because if someone is interested in the basics of investing, then they should be getting different emails based on someone who's maybe an intermediary or intermediate who has signed up for something else. So it's complicated, and I've set different pipelines through, but that's how I make it work. So I also have a point system on there. So if someone is opening my emails and actually clicking on them, then per click I'll have add 10 points to that person or 20 points to this person. And that's when I know if someone has more points, then there's someone to speak to. Whereas someone who hasn't clicked on anything at all and isn't engaging in my content, then maybe that's not the person I should be spending most of my time trying to nurture. So, you can have hundreds of thousands of people in your CRM, but really it's the people who are engaging are the people that you should be focusing on. So it's a tough one. You can't be just throwing stuff at a wall and seeing what sticks. It's really trying to nurture the people who are interested, because it's 1 in 100. That's how it really works.
Okay.
Yeah.
So what are some of the metrics that you follow in terms of, let's say the lead measures and lag measures? So you just mentioned that about 1% of the investors actually end up going through. Do you have metrics where you say, okay, I know that if I have a webinar, I'm going to get X% of the people I reach out to are going to join the webinar. Of those people who join, Y% are actually going to come through. Do you have it broken down like that?
Yeah. So in terms of the webinars, let's say I'm sending out 30,000 invites to that webinar. Out of that 30,000, 30% of those emails will bounce. That's just the way it is. And that's really how email marketing, sort of the metrics will be.
That's a pretty low percentage too.
Yeah.
That's solid. That's solid. That's so much more valuable than, when you're engaging with people on a platform. I just want to highlight the value of email marketing for a second. In terms of making a post on social about it, and then you have no control over what percentage of people see it or how that platform plans to distribute it, but it's so consistent and controllable when it is email, like being able to say, 30% bounce rate, as opposed to, I have no idea how viral this post is.
Well, exactly. Yeah. That is the good thing about it, because you can see, who's opened it, how many times they've clicked, and then what else they've clicked on. So it's very measurable. But open rate is typically 20%, and the click rate is probably about 1%. So 1% of people who are actually clicking, who are registering for the webinar. So I can send out 30,000 invites, and I may get sort of 40 or 50 people who are actually registered for the webinar. Then how many people turn up? Maybe 10 or 15. But that's just the way it works.
Right.
But what we're looking for is to get their email addresses to know that these are interested people who have opted in. So let's make sure we send them the recording of the webinar. Let's send them a survey. Let's get in contact with them in one way or another. And that's really how it works, is building the database with not just hundreds of thousands of email addresses that I can just send a deal to. It's really so I can nurture relationships, because, like I said, no one's going to just hand over money to you. You need to have spoken to these people at least 3 or 4 times, understood their goals, and answered every single question that they have, where I then put them on further down the pipeline as someone who's in the investor club. So I'll have a separate club who are people who I've actually spoken to and who I've qualified, and those are the people who I target, because ultimately you'll only get sort of 10 to 20 people who invest, and then you've got $1 million to invest in a deal.
Yeah. And then those people that end up being in the investor club, do they get any special content, or like it's a separate tier that they're in, or is that more just like an internal category for you?
They'll get some special content as well. So they'll get access to every single deal. So in the syndication space, you're obviously working in guidelines with the SEC, and so there are some deals that are 506B and there are some that are 506C. 506C, you are able to market to anyone, whether you've spoken to them or not, whether you've dealt with them or not, but only accredited investors can invest in those deals. Whereas 506B, anyone can invest in those deals, doesn't matter whether you're accredited or not, but you have to have had a relationship with that person. So you should have discussed investing in general with them, understand that they know the risks and the goals and all that stuff before even sending the deal to them. So people in the investor club get access to every single deal that I do, whether they're accredited or not, because I know that I've spoken to them. So the SEC rules are pretty strict, and you don't want to mess around with ever breaking those rules at all.
Right.
Yeah.
What platforms and tools do you use for the CRM and those pipelines that you mentioned you build out?
Yeah. So I use something called CapBloom, which is very similar to Active Campaign, HubSpot, Zoho, and all these sort of CRMs. And those are really the best ones to use in terms of automations and workflows and things like that. I'll also use Zapier to integrate, whether it's integrating Meetup with my CRM, or integrating Eventbrite with my CRM, or integrating anything where I can capture leads from different platforms and make sure they come into this one CRM, because that's really the monster that's growing.
Right. And then once you have them in your system and you're actually engaging with them, what type of content or aspects of investing tends to resonate the most with people?
Yeah, no, that's great. So I'll start off with a welcome sequence, so sort of 5 emails in a row after each day, which is just a very light introduction to me, my background, investing, how it all works, and going through the basics, and really giving the option of every email that if this isn't for you, just unsubscribe. No hard feelings. Then after that, I'll go into an investor knowledge series, which is a 12-week series, 1 email every single week, where I'll run through a little bit more detail into what it means to be an investor and how it all works, what we invest in. What really resonates in the highest click rate and open rate that I've seen is when we start talking about the risks. Can you lose your money? What are the risks? What's the worst case scenario? Because as an investor, that's what you want to know.
Right.
Everybody's happy to paint the rosy picture. Oh, you're going to make this much, you're going to do that. Real estate's super safe, the risk is super low. And whilst all those things are true, things can go wrong in real estate. People have lost money in syndications. They've lost money in funds. And so really being transparent, I think, is the key here. Because we all know in marketing that it's all good to put up great content and rosy things in emails and on posts, but if you're not being honest in terms of what can go wrong, that's really when you lose trust and credibility. So being transparent and real is really what investors want.
Okay. And then do you find that that tends to be a hook that pulls them into the webinars, or do you typically make the webinars on topics like that, and that's where you see the most
Yeah,
attendance?
no, great. So I've got a webinar next Wednesday, and it's called the common red flags to note before investing in a real estate syndication. So, what are the things I should be looking out for before even thinking about investing? And the fact that I'm doing that and I want them to invest in my deals, but still telling them what to look out for, builds credibility really
Yeah.
because of course I'd want them to invest in my deals, but also if they're investing in someone else's, I want them to know if that's a good deal or not because you don't own the investor. They'll probably invest in many different deals with many different operators, but I want to be that sort of fountain of knowledge and that sort of authority of trust. And that's really how you build that credibility.
Yeah. I'd love to segue into a bit more about what does it take to be a wise investor and some of those things that you do teach. So what are some of those red flags that people can be aware of when looking at investing in a syndication like yours?
Yeah. So, look, the first thing would be the management team, and you call them the sponsor. What is their track record? What is their experience? What is their investment thesis? How many deals have they done before? Have they gone full cycle? What's gone wrong? Really, that is the first thing to really think about. Then it would be looking into the deal itself. So, how do you underwrite a deal? And I'm not talking about, right, investors have to learn this big spreadsheet now and learn how all the returns work, but really, what are the things that you should be looking out for that could be a red flag? So, have they projected property taxes properly over the next 5 years? What exit cap rate have they used when they're projecting their sale rate? Is it too high? Expense ratio. Have they projected that their expenses will be going up 3 to 4% every year in line with inflation? Is their rental growth projections too high? I mean, there's a list of things that they should be looking for, and so that they can ask the sponsor these questions. If the sponsor can't answer those questions, or they're not transparent, or they're mumbling and they're like, maybe this, maybe not, that's the time to walk away and really, really not look at that deal. So there's a long list of things in terms of seeing what red flags there are, but it's key for investors to at least have a handful in the back pocket, because if you're not asking the right questions, the sponsor's not going to tell you anything. They'll just let you invest.
Yeah.
Which is something you really need to look out for.
And that's the scary thing about this space is how easy it is to really sweep a lot of scary numbers or poor due diligence under the rug. Because I mean, I know a handful of people in this space that the image that they've created for themselves is slightly different than what's behind the curtain. And
Oh,
it
yeah.
is disappointing because then that ends up, creating suspicion and uncertainty for people who are actually operating ethically
Yeah.
in the space.
Yeah.
But yeah, man, it's so easy and there's so many numbers and it's so complex that you really do have to have a strong element of trust and
Yeah.
building that long-term rapport with people. And that's part of why I love what you're doing so much, is because you're building yourself as the trusted authority for people to invest through you into these deals where you say, hey, look, I vetted the operators, I vetted the deal, I can verify that this is good, and I am representing you with your best interest because like my business is based on the quality of the return that you get, as
Yes.
opposed to being an operator where, I mean, there still is a strong element of that trust and rapport building.
Yeah.
But it is slightly different when your whole business is wisely investing people's capital.
Exactly. Yeah. I don't think smoke and mirrors works anymore. I think the old sales tactics, they just don't work, and I think there's a lot of suspicion in this industry at the moment, especially what's happened recently. So, a lot of people invested in deals in sort of 2020, 2021 when rates were super low, and sponsors were just jumping into any deal because any deal was working because the rates were so low. So they were taking out floating rate bridge debt, and which is not a problem, but they just left it there with no rate cap on there. And once those were maturing, they've matured now and they're paying 10, 11, 12%, and it's really killed their deals. And so a lot of investor equity has been wiped out in the last 18 to 24 months. And I've met some investors, and you should see some of the texts I've got. It's like, I'm never investing in a syndication again. You guys are robbing people. I've lost $200,000, and I've lost my life savings, and a lot of hard things have happened over the last couple of years. So that's why I've sort of set my mission on, I'm not letting that happen, or at least I'm going to make sure investors are informed, because I'm not allowed to advise them. I'm not an investment advisor, but I do have a lot of knowledge and experience. So why don't I tie that up with content marketing and building a name for myself, but also saving investors from doing that with anyone else?
Yeah. In terms of the LinkedIn, just to touch on that again,
Yeah.
since you brought that up, what type of content do you typically post? Like, is it brief blogs? Do you post little videos? I know LinkedIn is starting to shift more towards like being able to post like recordings and something similar to Instagram. I know they're making a big push there.
Yeah.
I'm super bullish on LinkedIn myself. I actually have a few hours blocked off next week on my to-do list to build out my LinkedIn strategy. So I'd love to hear some of your thoughts. What type of content do you see performs the best on that platform?
Yeah, LinkedIn is my main focus right now. So I will plan and draft all of my posts on a Sunday, and I'll post every single day, so 7 days a week. And I'll have a bit of a mixture. So there'll be some real estate posts talking about underwriting or the market or interest rates, and maybe that would be purely written content, or some short form video content as well. So some of the reels that I use on Instagram and other platforms, I will use on TikTok as well, but with a slightly different sort of edge on it. Those posts do well, but I think the best posts that I've had the most engagement on would be when I'm talking about mindset, and I'm talking about
interesting.
Behind the scenes, and what my day is looking like. So if I've had a bad day, then I'll make sure I'll draft a post for it the week after, and put some selfies on where I'm not got a shirt and tie on, or where I'm actually just sitting there in my pajamas and I'm like working. I'm like, this is what it's like behind the scenes, and people resonate with that, because LinkedIn has traditionally always been seen as the suit and tie and whatever's real isn't on there. That's for Instagram, but LinkedIn is becoming a bit more real now, and people are resonating with it a bit more. So be as real as you can, and if people don't like it, that's not your audience. But the people who do like it, focus on those. That's your audience, because you're not trying to target every single person. You're trying to target the people that resonate with you, because that person might resonate with you and not resonate with someone else, and vice versa, and that's fine. You're not trying to be that person for everyone, and I think that's what we need to start thinking about and start believing in, because it's very easy to see someone on Instagram with, oh man, they've got so many followers, I need to do what they're doing. No. Do what you're doing and do what you're good at. Just be real, be you, because if you're trying to be someone else, you're never going to be yourself, and people are going to find that out very quickly. And it's harder being someone else. Just be yourself, and I think that's what is resonating with people on LinkedIn a bit more. So there's obviously a bit of a barrier. You can't just be dancing and doing some random stuff on LinkedIn, but yeah, keep it business focused as much as possible, and provide value, but be real at least on 2 or 3 of the posts.
Yeah, we were even talking about that a little bit before we started recording the show, where it's like, it often looks like people have so much more pulled together than they actually do, and it's not always roses and rainbows like we were chatting about. Yeah, and people connect with that vulnerability as well, with saying, oh, Ankur is like a real human. I can relate to someone who's a real human. I want to invest in someone who's a real human, because I think people have a natural bullshit meter. And when they see this like superficial, oh, everything is perfect, their bullshit meter either goes off, or if it doesn't go off, they may not be the type of investor that you want anyway. Right? Like it's the higher caliber, the people who pay close attention and are looking for that BS and have detected it previously, and they have like that experience. Those seasoned investors that see through the bullshit are the best ones, because like even when we were raising for the hotel, we ended up raising just over $3 million. And the worst investors, or I'll say the most challenging, not
Yeah,
the
yeah.
worst. They're all great people, of course. But when it comes to investing, the ones that they hadn't done it before and they were hesitant and fearful because maybe they grew up in households that talked about real estate is where you lose your shirt,
Yeah.
as opposed to the 90% of millionaires have like a portfolio, whatever the statistic is. And yeah, it was the ones that were fearful, that hadn't done it before, that were over analytical and moving slowly, where we had to
Yes.
say, hey, look, maybe this isn't the right deal for you, because we're looking for the more seasoned investors who they can look at it, they can look at the operators, the deal, they know what they're looking for, they invest, and then they're the easiest to work with as well, the easiest to update on. They've been around the
Yeah, you
block a
don't
few
hear from
times.
them.
Exactly, and those are the investors that cut through the bullshit. And if you don't have an authentic presence online, then they're going to spot that and they're going to move on.
I think so.
Like, I would rather, like you're saying, you show the authenticity. The ones that stick around do, the ones that don't. But the ones that do stick around are likely the ones that are more closely aligned with what you're looking for anyway.
Yeah. No, I totally agree. Being authentic, it's all about human empathy, isn't it? It's if you can watch something. I mean, there's so much noise now when you're scrolling, whatever platform you might be on, and sometimes, I'm sure other people have done it as well, and just sometimes I do. I'll scroll and go, oh, just shut the hell up,
100%.
just shut up, and scroll and scroll and scroll. And I'll keep watching, and I won't unfollow them. And I'll keep watching their stuff, and there's always some value, but I don't want to be that guy. Like, oh, just shut up,
Totally.
because that's when people start switching off and they stop believing you. And ultimately, if you're looking to attract a certain type of person, the whole point of you being on there is for them to believe you. And if they're not believing you, then there's a problem. So yeah, being authentic is 100%. And obviously you have to put a certain sales side of it in certain aspects, but really you don't have to. Just be real, and you'll start attracting the people that you want to attract.
100%.
I think.
Yeah, no, I think you're 100% spot on. Encore, we always wrap up the show with this question. The question is premised on how one's success is directly correlated to the quality of questions that they ask. So what would you say is a critical question for someone who's trying to get into private equity or operating in private equity? What is the most important question, in your opinion, for them to ask themselves?
Wow, that's that's a great question. I would ask myself, whether it's private equity or anything else, what do I want and why? And I'll go through what my why is, and that might help people and sort of think about what their why is. Mine isn't just what people say online. Oh, I want financial freedom. I want to be able to travel. I want to do these things. I've got something specific to me, that I've got two sons at home, and I have a reason to spend time with them. I want to free up my time so I can be the best dad I could be. That is my why. Then that will lead to, right, how do I make that time, and what can I do, and all those things. But if you're doing it just for money, or you're doing it just because you want to say you want time freedom, that's not good enough. It has to hit home. It has to give you a lump in your throat. It's got to be emotional. It's really got to change you, because when you're going through the hard times in your business, when you've got that self-doubt, remember your why, and it should be written somewhere. It should be a photo, it should be a mood board, it should be something, and that you look back at it and you go, oh yeah, I'm good. I'm carrying on, or I'm going to change path, or I'm going to do something else, but don't worry about it. Because if you're just doing it to be famous or to have loads of followers or to make loads of money, you ain't going to make it, mate. You're not going to make it. It's got to hit home, it's got to be emotional, and it's got to be personal to you. And that's when you can translate it into success.
That's solid. A good friend of mine said, vision without action is a dream, and action without vision is a nightmare.
Love it.
And it lines up with what you're saying around, if you're just going to work and you're doing these actions and you don't have any North Star guiding the decisions that you're making, a strong why, then you are in a monotonous nightmare.
Yeah.
Whereas if you have that vision and you are working towards it and you're delivering on your dream, and you have the North Star of, oh, I want to spend more time with my kids. Or like a big one for me was Jackie, that there was a period where we were in escrow for the hotel that we just closed on, and I was working. It was probably 9:30 o'clock at night, and I was ripping through work, which wasn't uncommon. I mean, that period, you're just
Yeah.
18 hours a day,
I
just
know.
ripping, and and I'll never forget. I was sitting there at my laptop, and I was eating dinner, and she made a comment. She said, "I hope we don't always do this." She wasn't being rude or anything. She said it super sweetly, but
Yeah,
she
yeah.
said, "I hope we don't always do this." And I looked over
Yeah.
and saw her sitting on the couch eating by herself. And that image
Yeah.
impacted me in that moment where I realized I'm working so hard for the next phase of life, because we're talking about having kids and the things that we want to do. And
Of
so for
course.
me,
Yeah.
I always have this sense of urgency. I think sometimes an unhealthy sense of urgency where
I'm
I'm
with
like,
you, man.
I
I'm
need to
with
move
you.
faster and grind and just
Yeah,
rip
yeah,
through
yeah,
work. And I
yeah,
also get joy out of moving fast and the
yeah,
grind of it all.
yeah,
And I realized that there are periods of my life where I am so focused on setting myself up for the next phase that I'm sacrificing my current phase. And that was a wake up call for me in that moment where I looked over and realized I need to, like, once we close on this deal, I'm going to
yeah.
take a break. Now we've started implementing, like, our dinners together are sacred, where
Excellent.
it's like,
Yeah,
even if I have some work, maybe after dinner I'll pick up and knock some stuff out before
yeah,
going to bed or whatever
yeah,
it is, because there are seasons for that too. But now it's like, no, dinner is a sacred time, and dinner is as important as escrow
yeah,
for the hotel,
yeah.
right? And it won't always be like that. There will be times where we have to give up dinners and
Of
everything
course. Yeah,
else.
yeah, yeah.
But
As
like,
long as it's not consistently like
totally,
that.
yeah.
Yeah,
And realizing like, oh, there will be a time when hopefully we have kids and we look back and say, oh, remember when it was
yeah,
just us? And it'll
yeah.
be like a sweet phase of life
Definitely.
that I want to be sure I'm not sacrificing, and having that underlining why to put
Yeah.
things in frame.
It's a hard balance, isn't it? Because I go through the exact same thing that you've just talked about, am I working too hard? I'm trying to hustle for the future and I'm sacrificing the present. It's a tough one. But then at the same time, we can't just chill all day as well. And that is the tough thing about being an entrepreneur, is that you have to hustle. You have to sacrifice. But if you are sacrificing certain things that are so important to you, like family, then you need to reassess. And I like to time block, and I talk about spending time with my kids and all that stuff. But if I'm working all the time just for the future, they're going to be 10 years old and they're like, I've got friends now.
Right.
So I don't want to lose this time as well when they're only sort of 1 or 2 years old. But at the same time, my mind's on the prize, which is like, we've got to get that money so I can get that time
Yeah.
back and all that stuff. And it's juggling that is really difficult. So I'll make sure I'll block certain times of the day or certain parts of the weekend where I'm like, yeah, I'm going to work on a Sunday, but I'll work at like 5 a.m. before they wake up. And so I've got the whole day with them. And
Nice,
so,
yeah.
we're doing both then. It's tough. And I don't think about my why every day. No, I always forget it. I have those days, and I take it out on the family sometimes as well. Like, I'm stressed today, and I try not to bring it into the living room, but you do sometimes, and that's the tough part of entrepreneurial life, when you're bringing work home, and you've got to try not to do that. But because you're living and breathing this dream, this business, and it's yours, it's hard to switch off. So I'm learning. It's we're all work in progress, aren't we? So
Yeah.
yeah, I'm always learning from those who are doing it better than me, and hopefully I can improve as well.
Yeah, it's like that your business becomes one of your children as well. And you're
Oh
like, oh,
man,
which child do I support
that's a
in
good
this
way.
moment?
That's a good way of doing it. Yeah, but yeah, it's tough, but we'll get there. We'll get there. But we've got to remember that it's never going to be perfect. And that is also another problem with being an entrepreneur and having this mindset, is that we always strive for perfection. We're perfectionists, and that's why we're doing this, because we don't want to work for someone else, because we know that we could do it better, and that's why we're
Right.
doing it ourselves. So great, and this country was built on entrepreneurs, and that's great. But being a perfectionist can sometimes be counterintuitive. It's counterproductive. It's not what we should be doing. We should be leveraging our time and using VAs and using team members to do things. And even though you can think you can probably do a better job than them, it's about delegating, and that's really that big leap which is the toughest leap to take when you're moving from a solopreneur to an entrepreneur.
Yeah.
And, because we all call ourselves entrepreneurs, but if you're just doing it all yourself, you're a solopreneur. You're doing everything yourself. And you have to do that at the start, but you have to take that leap if you want to really scale your business.
Yeah. And asking yourself, what are you optimizing for?
Oh, yeah.
Not letting perfect get in the way of progress. Like I've said this forever. Overachievers are wasting their time. Like literally, if you are achieving more than you need to, then that delta is wasted effort. You could be taking that effort and investing it in something else that's going to get you closer to your goal. Like literally, by definition, overachievement is a waste of time. Where you have to ask yourself, okay, am I letting perfect get in the way of progress?
Yes.
Am I doing something that's actually yielding a high enough ROI on my time that it's worth investing that in there? And just moving forward to progress towards the goal, as opposed to perfecting every single step of the way. And then now you're moving half a mile an hour while somebody who's just getting the job done and moving quickly, moving on to the next thing is ripping by you, and you will never catch up to that person.
I've made those mistakes and I continue to make those mistakes. If I'm adding a new section to the website, I'm literally every single part has got to be perfect. And sometimes I'm spending too long on that when I should be spending time on another part of the business or spending time elsewhere and my health or whatever it may be. So yeah, it's tough, but you're totally right. Overachievement, it's a waste of time.
Yeah, you perfectionists, we're talking to you. That's it. Ankur, where can people find you?
Yeah, you can find me on Instagram, Invest with Ankur, or on LinkedIn, Ankur Chadha. Type me in and you'll see me.
Awesome. It's been a real pleasure. I appreciate you.
Thank you. Yeah, it's been great being on. Thank you.